Hello, investors. Today we're going to focus on stocks which give us high dividend yields. Now, dividends are basically paid out by companies from the profits that they earn. And I know a lot of investors out there want to know what stocks are giving how much dividend. This is measured by something called the dividend yield. For example, a 1,000 rupee share company giving out 1 rupee dividend is lower compared to a 100 rupee share company giving out 1 rupee as dividend. So this ratio between the current market price and the dividend paid out is called the dividend yield and is expressed in a percentage. So the first one is Petronet LNG. I'm sure you've heard of this company. And I can see here that it has a dividend yield of 5.28%, which is not bad. But interestingly, it has an ROE of 25.8%. The PEG ratio is 0.56 and it has low debt of 0.28, which is also a nice thing. The FIIs also seem to be increasing their shareholdings over the last 2 quarters. Some negatives are that the DIIs are continuously decreasing their share from this company, and the company has delivered a poor sales growth. It's almost stagnant at minus 2.25% over the last 5 years. The next company is TV Today Networks. Now here we can see that it has a dividend yield of 6.72%. The PEG ratio is 1.4. The company is almost debt free, which is the best thing in any company. Ideally, you don't want a company to have a lot of debt. Ideally, you want high ROCE. Ideally, you want good cash flows coming in, also called free cash flow. We can see that the debtor days is improving, which means the efficiency of collecting is improving. And finally, the promoters and public shareholding is increasing. Generally speaking, promoter share increasing is generally considered to be a good thing, but you can't see shareholding patterns in isolation. There's just so many things involved for that decision to buy or sell shares in a company. So don't use it as a major indicator. And finally, FIIs and DIIs are reducing their shareholding. So this is one negative of this company. But my point is very simple. The dividend yield is 6.72. Number 3 on our list is Power Finance Corporation. And here we can see it has a dividend yield of 7.99%, which is great. The company's median sales growth is 16.73% for the last 10 years. Consistency is very difficult to do, and maintaining a 16% growth on their sales over 10 years obviously is a very good sign. The stock is trading at half of its book value. That is something you should maybe look into a little bit. The PG ratio is almost 1, it's 0.97. And the stock is trading less than the industry PE of 5.69. Now, this doesn't mean that the company is undervalued. Just because something is low PE doesn't mean it's undervalued. Just a point for you to keep over here. The question mark is, why aren't investors keeping this company equal to its peers? Maybe this is why the PE ratio is so low. This is one negative of this company, is that it has the highest debt to equity ratio compared to all of its peers. And the interest coverage is 1.37, which is low in relation to its high debt. Number 2 on our list is IOC from the petroleum sector. Here, the dividend yield is 10.1%, which is pretty high. The industry PE is 13.4, but this company's PE ratio is 4.53, which is much lower than the average. Again, you should find out why that is the case. Is it undervalued or is there something wrong with the company? But a 10% dividend yield is there. The stock is also trading less than its book value of 119. A few negatives I have here, actually 3 negatives. The first is that the company has delivered a poor sales growth of 1% over the past 5 years. Now, 1% is just not acceptable in any industry.
ये acceptable नहीं है.
Since there's no growth happening, maybe that is why this stock is so undervalued. The ROE is 14% for the last 3 years, Now, this may sound high, but it's low compared to its peers. Its peers are actually delivering a higher ROE. And finally, the FIIs are decreasing their shareholding quarter on quarter. And number one on our list is PNB Gilts, not the bank. This is a wholly owned subsidiary of the former. This has a dividend yield of 11.7%, which is the highest on this list. It's trading less than book value. It has median sales growth of 20% over 10 years. And while the industry PE is 17, this company's PE is 1.9. So there's a huge difference between the premium that the other peers are trading at, and this is severely under that. Some negatives I have here is that the debt to equity ratio is high compared to all of its peers. It is a small cap company, so the risk of investing is obviously much higher than any of the large caps. And there is almost none FII or DII holdings, or might I say, very negligible. So that's it. If you were looking for a list for dividend paying companies, this is the list. But don't forget to make sure you actually make a portfolio and do a lot of due diligence before you invest in any of these companies. Thank you and see you in the next video.